Hello, intentional business owner. Welcome. I am so excited to have you here. So, this is a free bookkeeping webinar where I'm going to be teaching you everything you need to know about bookkeeping for your business, the mistakes you are making, and how to do it the right way. Okay, so let's get started. First off, who am I? My name is Akiola Kifaya. I am a data entry specialist, and my niche is to help small business owners with bookkeeping for their business. I also help small businesses with pricing and costing of their products so they can sell their products and services at a profitable price. What would you be learning today? So you're going to be learning how to record your sales properly. You're going to learn how to record your expenses properly. You're also going to be learning how to record your purchases. You're going to be learning how to calculate your profit or loss statement. And I'm also going to be mentioning so many things in between as we go. Okay, so let's just get started right now. So first off, how do you record your sales? You might be thinking, what's there in recording sales? There's no big deal. Should be for me to just write it down. There are so many mistakes that I'm going to be mentioning now that you might probably be making when you're recording the sales of your products. So first off, you need to note that there are 6 important things for you to write down when you're recording your sale. You should not just write, I sold rice, 2 cups, this and that. No, there are 6 important things for you to note down when you are recording your sale. So the first one is for you to record the date the sale occurred, right? You want to ensure that you are writing down the date you sold that goods, right? So why are you writing down the date? Just in case of any discrepancies, in case of any future occurrence, and then you need to go back to that sale. So the date of that sale will help you to easily locate that sale that you have recorded. Right. Number two is you want to record the name of your customer. So while you're writing down the name of your customer, this is going to help you with loyalty programs. Probably you want to gift the customer that bought from you the most, right, in a whole year. So you want to write down the name of the customer so that you know who bought from you the most in case you want to do loyalty program, right? Now, the third thing you want to note down is the quantity of the product that was bought. The fourth one you want to write down is the amount of that product. So when you're writing down the amount, you're not going to write the total amount the customer paid you. So if, for example, a customer bought 4 pieces of your product from you, at the rate of 1,500 naira each. So the total like that is 6,000. So when you are writing the quantity, but you are going to write four. When you are writing the amount, you are going to write 1,500, not 6,000. So when you're not writing the total, you're not going to write 6,000 naira. Now, the last thing you want to ensure that you note down is the method of payment, right? How did the customer pay? Was it paid through cash or was it paid through bank transfer? Right. So the reason you want to note this down is in case you start getting confused about your business money. You want to know the amount of money you should have in cash with you, and you want to know the amount of money that you should have at the bank. Right. So if you are noting down where this money came in from or where this money went out to, so it will be easy for you to know the amount of money you're supposed to have in cash or the amount of money you're supposed to have at the bank. Right now, other important things for you to note when you're recording your sale. The first thing for you to note is that revenue is earned, right? Revenue is earned. What do I mean by revenue is earned? This means that any sale, any sale that you make, the customer does not have to pay for that sale before you record it. Now, this is one common mistake that so many business owners make. You wait till that sale is paid for before you now record it, before you write it down. So if someone bought something from you, let's say in July, and the person is yet to pay you, and the person paid you in September, that sale is for July. Because think about it, your inventory has reduced, right? That product has left your store. Your inventory has reduced because all of these things are connected together. So you want to make sure that whether or not the customer has paid you, a sale has occurred. Immediately the customer leaves with your product. So revenue is earned. It means that Whether or not your products or services have been paid for, you have to record that sale in the month that the sale occurred, in the day that the sale occurred, right? Now, the second important thing for you to note is that sales should be captured monthly. Now, I'm mentioning this because of service-based business owners that have people that pay them ahead. For example, if you are running a school, um parents will be paying you for a term. Whatever money they are paying you in that term is for 3 to 4 months, depending on the number of months that is in that term. And that good example is if you run a banking salon or if you run a laundry business and you have clients that pay you ahead. Some salons sell voucher cards to their customers. So this means that because some customers might buy voucher card for 3 months. So for the next 3 months, they're not going to be paying you any money. They've already paid you for all the air that they want to cut, right? This is a very good marketing strategy or sales strategy for you to mop up so much money for your business. It's going to help your cash flow. I'm going to be explaining cash flow as we go on, right? So if you have this kind of business whereby a customer pays you in bulk, they pay you for 6 months. You're a social media marketer and your customers pay you for 3 months. They pay you for 4 months ahead for your services. You are going to divide this money by the number of months that you were paid for. You are not going to record if, for example, the customer paid you 200,000 naira, 50K per month. That 200,000 naira is for services for 4 months. You are not going to record 200K as your sales for 1 month. You have to divide it into four. I hope I'm making sense. So revenue sales should be captured monthly. So it means that if you have been paid ahead for like 4 or 3 months ahead for a service that you are yet to deliver. So what you want to do is to ensure that you divide it by the number of months that you were paid for, and you calculate your sales based on each month, right? So that is all about sales. I mentioned the 6 important things for you to know when you're recording your sales, and I also said that revenue is earned. So when you are recording your sales, you should ensure that you are putting these things in place to so that the sales that you are recording will not be you're not going to be overestimating your sales or underestimating your sales. So if you put all 200K, for example, like the example that I made, into 1 month, you have overestimated your sales for that month, right? So you have overestimated your sales for that month. And if a customer takes a good from you and the customer is yet to pay and you don't record it for that month, you have reduced the sale for that month. So it's not just enough for you to keep records. Ensure that you are doing it correctly. And that is the essence of this webinar that you are watching. Now, this is a table that you can use. For example, you can take a screenshot of this table, right? So this is an example that you can use. So you can see the date, the customer name, the name of the item that was bought, the quantity that was bought, the unit price, and the total, then the payment method. If you are the kind of business owner that uses different bank, under the bank transfer, you can write the name of the bank so that you know the bank that the money is supposed to be in, right? So aside from keeping daily sales records, if you are doing manual bookkeeping, which I don't recommend by the way, I always encourage people to use an accounting software. But if you are using manual bookkeeping, this is something that you can use. Aside from your daily sales, you need to also keep a monthly summary of everything that was sold on each day. So you know that in this first record that we are keeping, we are just keeping maybe someone bought in a day, like for example, on the 31st of July, you made about 20 sales and you have written all of the 20 sales under 31st of July. Now, when you are doing your total monthly sales, you're going to write 31st of July and then you're going to add together all the sales that occurred that day and then put it into a daily summary. So on the 31st of July, how much did I make on 1st of July? How much did I make on 2nd of July? How many did I make on 3rd of July? Then you put it together to get a summary. Like I said before, if you're using an accounting software, the software will be doing all of these things for you automatically without stress, without you putting in any effort or any stress for you. Now, moving on to expenses. How do you record your expenses? There are five important things for you to note that when you are recording your expenses. Number one is the date you spent that money. Number two, the payment method, whether you paid via bank transfer or you paid through cash. I've already mentioned the reason why this is important, right? So you want to know where this money left through. So when you want to know your cash balance, did I pay this money through cash? Did this money come in through cash? So how much should I have as my balance in cash with me? Right. So you want to write the amounts that you spent, the expense category. Expense category is when you categorize your expenses, when you categorize your expenses. So for example, you are putting everything that has to do with staff under staff salary and healthcare. You're putting everything that has to do with transportation under transportation category. You're putting everything that has to do with data, internet, or your subscriptions. If you pay subscription, whether you pay for Canva, you pay for using your website, you pay for your domain name, all these things are subscriptions that you pay every month, right? So you can put everything together, categorize everything together under subscriptions. So it's easy for you to locate them. That's the essence of categorizing them. I'm going to be showing you some expense categories shortly, right? So you want to write down the category of that expense. Is it rent? Is it salary? Is it transportation? Is it subscription? Whatever category that expense fall under, you want to put it there. Then the last thing is the expense description. That is, you explain what that expense is for, right? This will help you to remember whatever it is that you spend that money on in the next future, and you'll not be like, oh, what did I use this money for? Right? It's under subscription. What subscription was this? So expense category, the expense description would help you determine easily what this thing is for. Now, other important things to note when you're recording expenses, just as in sales, as I said before, that revenue is earned, expenses are incurred. That's the opposite. Expenses are incurred. You should already know what this means. So it means that whether or not you have paid for this expense that you are incurring, you have to record it. So if you're a tailor, for example, and you have a sewing machine, right? And then you call someone to come and help you repair the sewing machine. And then you don't tell the person that, oh, I'm going to pay you later, right? So whether or not you paid that person at that particular time, you have to record that expense for that month. So expenses are incurred. You don't have to necessarily pay for them before you record them. Now, the second thing is also that expenses should be captured monthly. So there are some expenses we pay for them in a year. Like for example, I mentioned Canva, your subscription. When you are paying, some people might pay for a year. But let me use I remembered something now, domain name. Yeah. Let me use domain name for example. When you pay for a domain name, you pay for a year. You don't have the option to pay for months. Now, when you pay for a year, when you're recording that expense, don't record it in that month that okay, in July I bought domain name 10K. No, that 10K that you bought the domain name, you have to divide it by the number of months that domain name is carrying. For example, now when you buy domain name 10K and you are going to use it for 12 months, you have to divide 10K divided by 12 for you to know the expense, monthly expense for that subscription. And that thing is rent. We pay rent a year, 6 months at least. I don't even think it takes 6 months again, right? So you pay rent 6 months, a year, 2 years, right? So when you pay this rent, you don't just go and record it down. I spent 400K on rent this month. No, you are understating your profits for that month. It's going to look like you did not make any profits in that month. The right way to do it is to divide this expense into monthly expense. Because come to think of it, it's not only that month that is going to be carrying the burden or enjoying the rent, right? All of these months are going to be enjoying that. So you divide it by the number of months that you paid for, right? So that will be all about expenses. Now, these are expense categories that you can use in your business. This is rent, repairs, and maintenance. So if you repaired gen, you repaired your AC. So instead of you writing repairing of AC separate, repairing of gen, so everything you can categorize them under repairs and maintenance. right? So salaries and wages, IT and internet, transportation, meals and entertainment, oil and diesel, advertising and marketing, and so on and so forth. So you can take a screenshot of these expense categories and then you use it for your business, right? Now, how do you record your purchases? First of all, what is purchases? What do we know to be purchases? Purchases is when you buy your raw materials. Let me just put it that way, as simple as that. Purchases is when you go to the market to buy your raw material. So if you sell beauty products, you sell skincare, you sell healthcare, you make zobo, you produce your products. When you are going to the market to buy your raw materials, you are doing purchases. That is not expenses, right? So purchases is different from expenses. Purchases is when you are buying something that will still bring in money for you. If you sell clothes now, you sell female dresses. When you go to the market to restock the dress that you want to sell, that is purchases. Because you are still going to sell it to make money. Anything you are spending money on that you still make money from, it is not expenses but purchases. But expenses are those things that you spend money on that will not bring money back for you. Example is when you pay for electricity. When you pay for electricity, are you going to sell the electricity to bring the money for you? No. Of course, the electricity is helping you make money in the store, but you don't sell electricity. Electricity can only be a purchases for you if what that is what you sell, right? So purchases is when you're buying your raw materials. Then let me confuse you. Purchases is when you're buying your raw materials, whatever business that you're, as long as you are going to buy goods that you are still going to resell, that is purchases. So when you are recording your purchases, is easy. Just write down the date that you made the purchase, the amount of money that you spent, the quantity that you bought, and then you multiply the quantity that you bought with the price per unit to get the total. Okay, so moving on, how do you calculate your profit and loss? I'm sure a lot of you have been waiting for this um part. How do you calculate your profit or loss? So there are five important elements to put into consideration when you're calculating your profit or loss. Number one is your total sales for the month. Number two is your cost of goods sold. I'm going to be explaining all these terminologies. Number three is your gross profit. Number four is your operating expenses, and number five is your net profit. Okay, so these five things are very important. But one thing you need to notice that you cannot achieve this, you cannot know these five things if you don't do your bookkeeping. Take it or leave it. How would you know the total sales if you have not been keeping record of it? Then you now start using your head to guess, which is very wrong, right? So what is your total sales? Then the cost of goods sold. Cost of goods sold is the cost of the good that you have sold, just like the English implies. The cost of the goods that you have sold. So if you have 50 pieces of your product, for example, and at the end of the month, when you are closing your account, you only sold 30 pieces out of that 50 pieces, right? So your cost of goods sold is the cost of the one that you have already sold, the cost of the 30 pieces that you have already sold. That is your cost of goods sold. Subtract your cost of goods sold from it. That is the cost of purchasing your product or the cost of producing your product. You deduct it from your total sales, then you're going to get your gross profit. Now, don't forget that there are other expenses that you make in your business aside from purchasing your product. You pay for electricity, you pay for rent, you buy data, you pay salaries. So all of these other expenses are known as operating expenses, right? So by the time you deduct your cost of goods sold from your sales, the profits that you are getting is still your gross profit. That is not the real profit that you have made in your business. Now, I've explained operating expenses just now. So these are expenses that you make in order for you to run the day-to-day activities of your business, right? So when you pay for electricity, without electricity, when you pay for rent, when you pay salaries, when you do all these day-to-day activities in your business, all these expenses that you make, they are called operating expenses. Now, when you subtract your operating expenses from your gross profit, you are going to get your net profit. Okay, you are going to get your net profit. So your net profit is just like the real profit that you have made in your business. So all these, you know that to calculate your profit is just like your cost minus your sales. But that cost is not just the cost of buying your product. It also entails all other expenses that you pay. If you have a website, the amount of money that you pay for to host for your website, any other money that you are spending aside from the money that you use to purchase your good, you have to subtract them to get your net profit. So these five elements are important when you want to calculate your monthly profits, your total sales. You have to get your cost of goods, so that is the cost of each product that you sold in that month, right? So you subtract your cost of goods sold from your total sales to get your gross profit, and then you subtract your operating expenses from your gross profit to get your net profit. So yeah, the most important thing for you to know is your total sales and your cost of goods sold and the amount of money that you spend in your operating expenses. Once you know these three, it will be easy for you to know what your monthly profit is, right? So now let's do a breakdown of everything I just talked about. Let's do an example, right? So the first thing is your total sales. I said the total sales is the monetary value of product or services that you have sold in a month. So in this example, let's say that we have made 600,000 naira in sales or revenue. Sales is also revenue, right? Now, the next thing you want to know is your cost of goods sold. So, like I said, the cost of goods sold is the cost of purchasing or producing the goods you have sold in a particular month. So the ones that you have not sold is not part of your cost of goods sold. I explained earlier that if you have 50 pieces of a product and you have only sold 30, your cost of goods sold will be the cost of that 30 pieces, not the cost of all the 50 that you bought, right? So let's say we bought 50 pieces of shoes and we sold 20, and the cost of one shoe is 10,000 naira. Our cost of goods sold for that month will be 10,000 naira times 20, which is 200,000 naira. Let me say that again. So let's say we bought 50 pieces of shoes in a month, and out of that 50, we sold 20. The cost of one shoe is 10,000 naira, and we have sold 20. So 10 times 20 is 200,000 naira. So our cost of goods sold for that month will be 200,000 naira. Now, the gross profit. The gross profit is the profit after deducting your cost of goods sold from your total sales. So sales minus cost of goods sold, that is 600,000 naira from our example, minus 200,000 naira give you 400,000 naira. So this 400,000 naira will be our gross profit. And like I said, your gross profit is not the real profits that you made in that month. Now, the next thing is your operating expenses. I also mentioned that the operating expenses is expenses you incur in running the day-to-day activities of your business. So, like rent, salaries, electricity, depreciation expense too. Depreciation expense is the depreciation of your assets. Assets are things that you have in your business that can last for at least 1 year, right? So any tangible asset, any tangible thing that you buy in your business that will last for like at least 1 year, like your machines, right? So you do depreciation on them and then you subtract it from your sales every month, right? So like your depreciation expense. So all of these are operating expenses. Now let's say our operating expenses for the month is 150,000. And when we put together our rent, put together our salaries, our electricity, everything, just an example, is 150,000. Now we are now going to get your net profit. Your net profit is what we refer to as the real profit of the business. That is when you now to determine your net profit, you have to subtract your operating expenses from your gross profit, right? So from our example, 400,000 naira is our gross profit, and our operating expenses is 150,000 naira. So our real profit for that month is 250,000 naira. I hope you understand. So you can rewind, pause, replay so that you can watch it over and over again, listen over and over again, so that you can understand and see how you can implement this for your business. But okay, so I did a summary here. Total sales 600,000 naira, cost of goods sold 200,000 naira, gross profit 400,000 naira, operating expenses 150,000 naira, the net profit will be 250,000 naira. So that's 600,000 naira minus 200,000 naira, which gives us 400,000. Then 150,000 minus 400,000 minus 150,000 will give 250,000, which should be the main profits. Now, before I go, I want to quickly explain the three main problems business owners face and how you can solve it, right? There are three main issues that business owners face when it comes to their business money. Now, how these problems, how do you solve them? Now, I'm going to be mentioning these three main problems, and I'm also going to be teaching you how you can solve them. Right. So why do you face this problem? You are making consistent sales, but you don't know what your monthly profit is. Number one. Number two is you feel confused about your business money. And number three, you sell out your product, but you still can't afford to spend enough money on yourself or for your loved ones. So these are the three main problems that business owners face. Number one, they are selling, right? You are making sales, but you don't know what your monthly profit is. Number two, you feel confused about your business money, right? You feel confused about your business. You don't understand what is going on. Money is going in, money is coming out, and you don't understand what is happening again. Sometimes when the money comes, you take part of the money, you go to the market to restock because you are finished selling or the product is almost finished, and then you sell again, and then you spend money on some expenses that are coming up, and then everything is just going in and coming out, and at some point you don't even understand what is happening again. Now, the third problem that small business owners go through is that you sell out your products, but still can't afford to spend money on yourself or your loved ones. So this is where so many business owners complain that at the end of the month they don't know where their business money is. They are complaining, I don't know what's happening. I have money this minute, then the next month I don't have any money again. I made sales of over 1 million this month, and at the end of the month I can barely find 50K in my account. I don't know what is happening. So this is three main problems that small business owners face in their business. Now, the first problem, let's talk about the first problem. The first problem is making sales without knowing your monthly profit. This is so common about it in so many small business owners. So many business owners that they don't know what their monthly profit is. So we have already gone through how to calculate your monthly profit. So you should not have that issue again. But what is the reason? Why is it that you don't know what your monthly profit is? It's simple. It's because you don't keep track of your business transactions. If you keep track of your business transactions, you would know your monthly profits because you would know the exact amount you made in sale in that month, and you can subtract your expenses from it. I already taught you how to do it, but because you are not determined to keeping track of your sales, to doing your bookkeeping, you are having issues to knowing what your monthly profit is. So for you to know what your monthly profit is, aside from you learning how to do it, which I have just taught you also have to be intentional. It cannot fall on your laps. You have to do it. The same way you put in effort to make sales in your business, also put in that effort, that dedicated effort to ensure that you know what your monthly profit is. It might not be easy because I know that yes, you have a lot of things to do, but it's not easy to run a business. It's not easy to grow a business. Whatever is worth doing at all is worth doing well. What's the essence of you doing running a business, making sales and all, and at the end of the day, you don't even know the progress. You don't even know if your business is doing fine. And you are making a lot of sales does not mean you are making profit. The money will just be deceiving you. You'll be seeing lots of money, but you're not making any profit. But you would not know because you're not keeping records, right? You would not know because you're not keeping records. But if you are keeping record and you have tried to calculate your profit at the end of the month, then you will know where your business stand. I've seen people who are making sales over 1 million naira in sales, and by the time we do their record keeping, they are not even making more than 100K in profits. How would you make sales of over 2 million naira and you can't boast of at least 500K in profit at the end of the month? Right? So, if for you to know what your monthly profit is, learn how to do it, which I have just taught you now. And number two, be dedicated, be intentional about it. Find ways to make it easier for you. And then this is why I always encourage business owners to use an accounting software. If you use an accounting software, it's going to be easy for you to do your bookkeeping, because like everything I explained earlier, the only thing you need to do if you're using accounting software is to enter your sales and enter your expenses. Once you enter the two into it, the accounting software will generate all your reports for you to calculate your profit or loss for you. It will show you your cash flow. I'm going to explain cash flow later. It will show you your cash flow. It will show you It will show you your income for the month, your expenses for the month, chart and graph. It will show you relationship between all your expenses. It will be automatically be generating all these reports for you. But if you are doing it manually, it's going to be stressful. So I always discourage small business owners from doing their bookkeeping manually. I always encourage you to use an accounting software. It is easy to use. You can just install the app on your phone and then use it. And if you are using an accounting software, don't use an accounting software that is not cloud-based. Don't use all those accounting software that are just apps. No. Use the one that is cloud-based, that you have to sign up on the web and all, so that your records are saved. If your laptop spoils, if your phone spoils, you can log into the account anywhere at any time and you find all your. Okay, now let's move to the second problem. Okay, I've already mentioned all this. Why bookkeeping is important? It helps you to compare your past and present data, right? Bookkeeping helps you to compare why you should do bookkeeping. Why should you take it seriously? Now, if you made sales in this month, let's say you made 3 million naira in sales this month, and then in the following month you made 1 million naira in sales. This is the importance of bookkeeping. It helps you to compare what did I do last month that made me make a lot of sales, and what am I doing this month that is not making me make more sales. What is that strategy that I used in the previous month that I can replicate in this month? At the end of the year too, you can look at all your records for the year, compare each month to each other, or compare last year, compare 2021 records to 2022 records. Is there improvement? In the whole of 2020, 2021, how much was my total sales? How much was the whole money that I spent in 2021? How much was my profit in the whole of 2021? Now compare it to 2022 and say that in 2022, what was my total sales? What was my total expenses? And what was my total profit in 2022? Was there improvement? Did I reduce? Did I increase? If I did not increase, what are the things that I did not do that did not make me increase? If I increase, what are the things that I did that made me increase? And what more can I do in 2023 that will make my records better? Right? So it helps you to compare. And like I said before, if you use an accounting software, it's going to be calculating your total sales for you for the whole year. It's going to calculate your total expenses for you for the whole year. It's going to calculate your total profits for you for the whole year. Those of you that wants to win grants, you want investors, people to invest in your business. How would you be able to get people to invest in your business if you cannot present them that in 2021 we made so amount of money in sales and we made this amount of money in profit. And in 2022, we did this, and we know that if you invest in us and we are able to expand, then we can make more money together, right? So this is how you can get investors. But if you yourself, without even getting investors, you cannot compare your numbers and make good decisions for yourself, how would you be able to grow your business? So, and this brings me to the second point, which is helps you make informed decisions for your business, right? So, like I said, how would you know if you need a business loan? If you're not keeping records, you cannot know if your business needs more money to grow, right? Then number three, I've said all of this before, it helps you to gain more investors and to it to last this last point too is very, very important. You would know what to expect from your accountant in the future. If you learn bookkeeping now as a small business owner and you have been keeping records now by yourself as a small business owner, it might be tedious, but one of the advantages that in the future, if you eventually hire an accountant to work for you, you know what to expect from him or her, right? If the accountant is being dubious or if the person is doing rubbish, you would know because you already have the experience. But if I small business now, you don't even know anything about bookkeeping, you don't even know anything about accounting. By the time you hire an accountant, your business grows, you now hire an accountant to work for you, and the accountant is generating rubbish reports for you. How would you know that the report that is generating is wrong? Right. So it's important for you to learn bookkeeping and to also do it for your business, right? So now the second problem is business money confusing you. And the reason is because you don't understand your cash flow. So the other time that I talked about money going out of your business and money coming into your business, you make sales, you pay for expenses, you buy course, you go to the market to restock, money is going out, then you sell again, money came in again. Like I said, it gets to a point that the money begins to convince you. So this money going in and money coming out is what we know. it's called cash flow, right? Cash flow is money, is the amount of money that flows in and flows out of your business. So when money is coming in, when money is stripping in, that is cash cash flowing in. And then when money is going out, it is cash flowing out. And cash flow can come in different forms. It can come in form of sales, it can come in form of people lending you getting loan for the business. And then also when you also input your own personal money into the business. Then cash flows out of the business in form of expenses and purchases. When you go to restock purchases, I've already explained purchases before, right? So cash flows out in that form. So cash flow, it helps you understand how much you should have in your bank and cash account at a given time. So you remember when I talked about your when you are doing your bookkeeping, you should record the mode of payment, whether it was paid through cash or paid through bank. So for you to know the amount of money you're supposed to have in your bank account, you need to understand your cash flow. And sincerely, understanding cash flow is not easy. As a small business owner, you cannot have a lot of things in your mind, and at the same time, you're not trying to understand cash flow. You're trying to put it is a lot. Is a lot. It's going to be very draining, and that is why using an accounting software is a no-brainer, right? That's why using an accounting, it makes it everything. This cash flow is going to an accounting software will show you a chart of the months that money flowed in the most and the months that money flowed out the most. Right, so you see it. How much did you begin with at the beginning of this month? How much flowed in at the beginning of this month? I mean, in the whole of this month. How much flowed out in the whole of this month? Then, what is my balance at the end of this month? An accounting software will show you,